funding round. You can't have the key to your future be talking negatively. You better get out there, Sam Altman, and say whatever you can say on internet. So they have to calm this down. They're trying to raise money. If you told me that NVIDIA no longer believes that they want to be supporting in the same way OpenAI, that's not the valuation they're getting.
Damage control.
Yeah.
101. So there you go. I think that, we'll see we'll see what happens tomorrow with it. This story's not going to end.
Up next, final trades.
Next, it's the M, shorthand for price to earnings multiple, that actually determines the price of the stock. This is stuff that really just confounds many people.
Mad Money, next, and streaming on CNBC Plus.
Markets can move just as swiftly as your day does. And you may be wondering if your portfolio is keeping up. Choosing the right investment can seem daunting, but we've got you covered. High income potential is on the other line. Answer the call.
Before investing, carefully read and consider fund objectives, risks, charges, expenses, and more in the full and summary prospectus at globalxetfs.com.
We're standing up for our right to be lazy.
By sitting down.
And reclining back. Because we work hard and want to relax hard. We, the lazy, are taking back lazy.
On our Lazy Boy furniture.
Lazy boy. Long live the lazy.
From 1838 to 1908, the United States Mint struck one of the most enduring gold coins in American history, the Gold Liberty. These coins circulated through the Wild West, the Gilded Age, at the dawn of the 20th century. And now, for a limited time, you can own them by the pound. That's right, you can secure a full pound of U.S. government-issued Gold Liberty coins. Each coin is an original piece of history struck in various sizes, all in collector condition with clearly visible dates and mint marks. Guaranteed. Call 1-888-517-8568 now to secure your full pound of historic U.S. Gold Liberties struck between 1838 to 1908 during America's age of expansion, innovation, and progress. Plus, with every order, you'll receive a bonus American Collector's Pack valued at over $230 free. Don't wait. Quantities are limited. Call 1-888-517-8568 now to claim your full pound of Gold Liberties before they're gone. That's 1-888-517-8568.
With a Shield Level Pay Plus annuity from Bright House Financial, you can turn a portion of your portfolio into guaranteed lifetime income for whatever the occasion calls for. Bright House Financial, build for what's ahead.
I always thought I was just bad at money, but it turned out I didn't have a money problem. I just had a clarity problem. Monarch showed me exactly where my money was going, and I already saved like $200 this month. If you want a full picture of your finances too, start your free trial at monarch.com.
It's terrible. Politics seeps into everything.
What do you mean? Talk about climate change, or the economy, or of course, elections.
You can't find out what we should really expect to happen.
But of course you can.
Go to IB Paris Forecast Trader.
Put your money where your mouth is.
Final Trade is sponsored by Interactive Brokers. The best informed investors choose Interactive Brokers.
Final trade time, like go.
Yeah, maybe a cold winter, and for UPS it's been a long one, but I think it's starting to thaw. I like UPS here.
Bingo.
Fidelity, new CEO, the right CEO, I got this one right. Insider, and I think he's the right man for the job. I think that discount to target on the multiple is insane. The T in Timbo, target.
Yeah, if you like Palantir here, which I don't, you might want to take a look at Snowflake. To me, decent better in some aspects, better valuation.
Breaking news to not allow us to have Carter Worth talk about McDonald's, the bullish formation that he was seeing, but MCD.
Thank you for watching Fast Money. Mad Money with Jim Cramer starts right now.
money. Welcome to my friends. I'm just trying to make money here. My job is not to gain, but to put it in context. So call me 1-800-747. Tweet me at Jim Cramer. Don't be fooled. Not everything is bad. Stop making moves because of false tells, things that mean nothing or things that look negative, but are actually positive when you do a little digging and some thinking. If you let yourself get shaken out, you're liable to miss terrific moves like today, where the Dow jumped 515 points, the gain climbed 4.54, and NASDAQ climbed 0.56. Worst, you're passing places to buy great stocks at lower prices. If you just want to forget about the averages, think about individual stocks. Why don't we start with last night? Last night, you know what? It was a textbook case of the Sunday scaries. I keep seeing this happen. You know, I watch the S&P 500 futures like a hawk. Not just because I write my Sunday think piece for Cnbc Investing Club members, but because they're so often wrong. And I want to warn people that there could be some terrific buying opportunities obscured by these futures. We had a strange timeline on Sunday night. The futures opened about flat, but then they collapsed. Why? The only thing I could find was a nosedive in oil and natural gas, as well as gold, silver, and crypto. Every article, every snippet of news last night told us that our stocks would go down because they tracked the weakness in those commodities. It was presented as an ironclad tie-up. Problem is, it's completely bogus linkage. It's just plain wrong. Why don't we put things through some common sense? We'll kind of use like like a filter, okay? Oil has been going up because of tensions with Iran. These tensions diminished as there has been some communication between us and the Iranian government this weekend. A meeting is now set between White House envoy Steve Witkoff and his counterpart from Iran. It seems like there could be some sort of dialogue that can take war off the table. It's good news for 340 million Americans that oil fell 4%. Good news, not bad news. Natural gas falling more than 25% today, its biggest one-day decline over 30 years, a function of more orderly distribution of gas in this country. After all this build out of pipe, America still has a very flawed distribution and storage system, struggles anytime we get hit with a nationwide cold snap. But now we've gotten our act together, at least this weekend. This decline is fantastic for every home that's heated by nat gas. When oil and gas went up, we thought they'd hurt the economy by putting pressure on the consumer. Higher energy prices were considered bad. So when they both reverse, how the heck is that bad too? Of course it's not. It's positive. But the journalists and the traders they quote either don't understand that or they wanted the market lower. Both are irresponsible. How about gold and silver? Okay, these have been the subject of intense speculation, mostly by Chinese investors, by the way. These speculators were apparently undercapitalized, using too much leverage, lots of individuals. I'm not that focused on gold. The rising price only hurts new jewelry. The existing jewelry actually goes up in value. There's a lot more of that. Positive. Silver's not as precious, but it has more industrial uses, solar panels, electric vehicles, batteries. The rally in silver jacks up the price for all sorts of electronics and electronic vehicles. Expensive silver is a clear negative for the economy. On the other hand, a rapid decline is terrific for the economy. So why would you sell stocks on a rapid decline? How about crypto of all kinds? And there are many different varieties if you go to CoinDesk, as I do. When you see crypto up, that means there's less money going into its competitors, the stock market. Again, thinly capitalized players have sent it down. The only real fallout might be severe strain in a company called Strategy, which has bought a lot of Bitcoin with borrowed money. Strategy, of course, this week. I don't know how exposed it is. But again, I'd rather have the money come into the stock market rather than Coinbase, which do a lot of crypto business. I've seen their stocks get hurt, but those are actually levered to volume, not the price direction. So it's actually good for them, unless there are so many clients on margin to get wiped out. To recap, the reversals we got this weekend were in every single case positive, not negative. The S&P futures should have been higher, not lower. They were just clearly wrong. It's okay. People make mistakes. But I question the verbiage around it. This morning we had disarray because of those same futures. They pulled down everything. If you knew that these negatives were actually positive, you would have been able to buy a host of stocks on the cheap. The semis, the retailers, the banks, the data center plays, the transports. Retail, big. Now let's consider what was reported incorrectly this morning. Oracle's trying to raise $45 to $50 billion to continue its aggressive data center build-out. Last night, the company announced the terms. Half will be bonds, half will be equity or equity equivalents. I immediately heard lots of chatter that such a finance would be impossible to do. But I did some homework. I knew the syndicate desk was putting the deal together. I found out that the deal was already wildly oversubscribed. Oracle can raise the money in a heartbeat. So what happens? Well, after opening down, stocks like SanDisk, Micron, Western Digital, Seagate, all which make memory chips or disk drives for the data center, they took off. If you knew that things were good, not bad, you might have bought the stocks and sold them. But the information was not spread out effectively, and the journalists who followed this stuff were negative about the Oracle deal. So it was very hard for people to make money and very easy for people to lose money and be shaken out. What else? Okay, last Friday we got a set of numbers from a company called Colgate. You're probably familiar with. They were much better than expected. The delayed reaction, we saw some positive action in stocks of other companies that might rally or have better numbers too. They're in the same industry. And by the way, that included the drug cohort, not the foods. This was a highly unexpected move unless you read the Colgate call. You had to read it, though. The group had an insanely strong move right from the get-go. Now, not all the foods are bad. PepsiCo reports tomorrow. It's gone from 144 to 155 in 7 sessions. I don't know if that's still a buy. We'll see tomorrow. But I just want to point out that Colgate ignited a rally. But if you didn't know that Colgate was good, you wouldn't have known about the rally. Then at 10 a.m., we got this ISM manufacturing PMI report, and the results were the strongest since 2022. This is really about economic activity. It was fantastic for the industrial stocks. Again, the data center builders, but also, like, I'll give you 2 examples. FedEx, okay, up 10. Caterpillar, 657 to 690. They represent groups, transports, industrials that rally like mad when the PMI is strong. You get a strong number like that, and institutions always reach for retailers, too. So Walmart and Target, both of which have new CEOs, just started, both soared 4%. Costco rallies 3%. Oh, and then we hear about that Oracle deal, the one we're raising money for data centers, and the money's not a problem. I drove lots of money again into the memory and storage stocks. So let me give you an example. You could have bought SanDisk at $586 this very morning, okay? You know, it went out at $665. You could have bought Western Digital $243. It closes at $207. You just had to know the term allocation, meaning that you can't get all you want. These companies are trying to allocate product to their customers because there's just not enough to go around. That's a good hand. Now, NVIDIA got clobbered today because of what I think are ill-advised stories about problems between it and OpenAI. I have NVIDIA's Jensen Huang on the show tomorrow. You know what I'm going to do? I'm going to try to clear this stuff up. It really does need clearing up. And not just because I want the stock higher. That doesn't mean anything to me at all. I don't care. Now, I'm not a Pollyanna about the
Stock market savage.
If NVIDIA's bad, I've got to say it's bad.
Like and subscribe, download.
I don't think it is, but I will.
It's a crazy market. I'm here watching. I just got finished watching Fast Money, and now I'm watching Mad Money with CNBC's Jim Cramer. You know, I always advise people to go join the CNBC Investing Club if you want to learn how to invest. Oh, look at Terrible doing what it do. It's crazy. With Bitcoin down. That is wild. That say a lot.
Let's go to Robert, New York. Robert.
Join the CNBC Investing Club. You dig? That's tap in.
Thank you very much, Robert. You're the first one. You're the earliest. Thank you very much.
Like and subscribe. We're gonna be going live trading tomorrow. I've been really sitting on my hands. It's been a really crazy market. The portfolio is down. We read, and I'm just trying to make the money that was lost without making any type of ridiculous trades or making any stupid trades, and you know, trying to print money in any market, like the teachers say, how to make money in any market. Go get the book.
Todd Vassos is the CEO that they put back in, and he's a sharp guy like you.
Yes, he is.